Hello, and thank you for joining us for this local property tax free webinar. My name is Joanne Lavelle from Michael Lavelle Estate Agents in Dundalk. And I'm going to spend the next 20-25 minutes or so explaining to you using a PowerPoint presentation what's actually involved with the local property tax situation where we are now in October 2021. I hope that you find this to be of interest. It's my view that most people should be able to value their own property for the purpose of the local property tax. And I'll be explaining to you how you can do that step by step, and also pointing out some challenges that individuals might have. Now, if at the end of this process, going through all of the things that I've pointed out, you still are having difficulty with regard to ascertaining the value of your property, then by all means, particularly if you're in my area, get in touch with me and I can carry out a full valuation for you. Or if you're in another part of the country, or if you're abroad and it's in another part of the country, then do let another property professional know. But make sure that you get this right, because you want it to be right so that you don't have any surprises in a few years or at the next valuation date. And you want it to be right so that you're not overpaying on your local property tax. So I'm now going to share my screen and you will be able to see my PowerPoint presentation. Okay, so here it is. So local property tax 2021, get your house in order. So I'm going to give you a whistle-stop tour of why we are where we are now with regard to the local property tax. It's been with us for many years now, since 2013, and most people will have, it's just part of our landscape as property owners. But for a great number of property owners, this may be the first time that you're liable for local property tax, and that's for a variety of reasons. But the local property tax was introduced in Ireland as a result, really, as part of our involvement with the European Monetary Fund post-crash. It was designed, obviously, to bring in critically needed funds to the national purse, and it has been generating in the region of 480 million euro per year since it started. It is a self-assessed tax, and by self-assessed tax, I mean you decide how much you should pay, and in this way, the Revenue Commissioner expects taxpayers to do the right thing. That is, to file a return that she or he believes to be accurate. So we're now in the beginning of October, and in the last 2 or 3 weeks, the letters have gone out from Revenue. A lot of people, by the way, if you haven't had a letter, if you are a Revenue Online, a ROS registered person, then your letter is probably sitting in your electronic inbox. So about 1.4 million letters have gone out. The last time that this happened was in 2013. So it's quite a while ago since we had to think about this. And of course, in 2013, local property values were very low. Okay, and it was harder then really to accurately value our property because there were so few transactions occurring. Okay, it also meant that there was more room for interpretation. But the whole thing about it was that you had to self-assess, and this is the thing that we're going to be talking about today. So Revenue expects now that the income from the local property tax will move up to 560 million, and that is thanks to an additional tax grab or tax gathering of 100,000 homes. They're expecting that about a third of local property tax payers will have an increase in their liability, about half will have a decrease, interestingly, and about 1 in 10 will probably remain around about the same. So what's new to local property tax? There are some new features coming in this time round. There were exemptions in 2013, and many of those will now no longer be carried forward. So I'm thinking, for example, of the ghost estate exemption. That's pretty much gone now. So that's one of the exemptions which is gone. Also, you won't have been paying local property tax until now if your house is under 8 years old. And you won't have been paying local property tax to now if in the last few years there's been a change of use. So for example, perhaps the property was a commercial property and it's now been converted to residential. So that's a critical differential in local property tax. We're only talking about residential property. So there's 3 key steps involved in what we're talking about. One, you've got to value your property. And there are several sources of information which will help you as a property owner to reach a balanced opinion of what your house is worth. Step 2 is to submit the return, which you must do by the 7th of November. And step 3 is to arrange to pay. And there are various options as to how you can pay your local property tax. So I'm going to tell you a whistle-stop way very quickly the key fundamentals that you need to know about at this stage. So for local property tax purposes, residential properties are buildings or structures that are suitable for use as a dwelling. The definition of building excludes vessels like boats, barges, anything like that. It includes vehicles, whether they're mobile or not, and structures that are not permanently attached to the ground. So that will include, or rather that will disclude from the local property tax, your caravan, your mobile home, that kind of thing. If you're living in one of these, it's likely that you are exempt from the local property tax. And since we're talking about valuing property, what is value anyway? So value is the estimated amount for which a property should change hands on the date of valuation, and the date is in November 2021, between a willing buyer and a willing seller in an arm's length transaction after proper marketing. So that means that not a sale between friends where a discount is discussed, but between two strangers after the property has been properly marketed and negotiations have taken place. And it assumes that all parties involved had acted knowledgeably, prudently, and without being under compulsion or duress. So that's a whole load of information for a person who has never before had to value their property. However, we will be able to help you, so don't get lost in this. The valuation date is the 1st of November 2021. That is to say, what you have to tell the revenue is what you think your house is worth on the 1st of November 2021. So whilst that's a little bit forward, it's coming up in the next few weeks, it's nonetheless, you're going to be able to work out within a certain band of values, which we're going to talk about, how much your property is worth. So how do you find out? How do you find out how much your property is worth? Well, I know that we Irish people are very good at talking about property values anyway, and a lot of people will already know, but the kind of sources of information you're going to get for reaching this important opinion of value are, for example, you're going to look at the property price register, that's the PPR. You're going to look on property websites such as myhome.ie, daft.ie, propertypal.ie, for example, contact or look on the websites of local auctioneers and estate agents. And of course, also you're going to talk to your neighbours. And you're going to reach in the end the value that you assess to be correct for your property on the 1st of the 11th, 2021. Now, you're not going to be doing this in a way that you're judging based on your neighbour if your neighbour's house is not the same. So I always say, when I talk about valuations, you've got to compare apples with apples and oranges with oranges, and don't start comparing apples with oranges, because you're just going to end up paying either too much or too little local property tax. So here are some of the sources of information that you're going to use. And some of you will be very familiar with these. We're going to have a little look at a few things now just to see how easy or how complex it actually is. And of course, it's easy or complex depending upon how unique or how generic your property is. So these are the revenue bands that I spoke about. And this is a screenshot taken from the Revenue Commissioner's website. So you see there are 19 bands starting at band number 1, properties worth 0 to 200,000, right down to value band 19, 1.6 to 1.7 million euro. So here I am in Dundalk in County Louth today. We're largely in the majority talking about the 1 to 5 or 1 to 6 revenue bands. Okay, so here in Dundalk, for example, a 3-bedroom mid-terraced house with 1 bathroom is going to be in band number 1. Okay, and from there on we go on accordingly. And then with each band, you have the band number, the value range, and that has also changed since the 2013 valuation date. The bands have changed a little bit. And then the third column there is the local property tax charge based on whatever band you belong in. So here's an example. Joanne, she lives in a 4-bed semi-detached in Manidown Close in Dundalk. Obviously, I'm giving a Dundalk example because this is where I'm from. I went on to daft.ie and I searched for 4-bedroom semi-detached properties, and I got the grand sum of 2 properties in my search. So that's not a really very big search result. And with those 2 properties, one was 230,000 and one was 360,000. So that's band 2 versus band 4. And there's a difference of 180 euro annually in the local property tax liability. So really just looking on daft.ie to value my property hasn't really given me the answer that I need, because there's very little data and it's very broad. So I need to go a little bit further and do further investigating. So the next place Joanne goes to is the property price register. Now, for somebody like me in my profession, I'm on the property price register all the time. But for somebody like you who's not a property expert, you're not going to be so familiar with it. So I can tell you, you cannot search in the way that you searched on Daft, searching for 4-bed houses in a general area. You can only search by address. So for example, if I gave this example of Down Close, you can search Down Close. And you'll be able to see what properties in your area, immediate vicinity, neighborhood, development, estate, have recently sold for. And if there's nothing in your estate, then you need to think about other estates in your area that will be similar to yours. So, for example, I'm going to move on now, and I did a search on the PSRA website. I typed in Down Close in the address. I typed in County Louth, you can see there. I didn't bother putting in a month or an end month because that's just being, too narrow. We just left it all for the year 2021, you see there, because the valuation date is November 2021. And the Property Price Register has obliged with 2 transactions that took place in Down Close during this year. And in April, number 106 Down Close sold for 246,000, and number 69 Down Close sold for 250,000 in February. This is all public information, okay? So now if I go back to my Daft search, the 2 houses that came up in my search there ranged from 230 to 360. So clearly from the information in the property price register, I'm more at the lower end of that range, around about the 240, 250 mark. And then you see down here, that's band number 2, because when I look at my bands, 240, 250-ish, that's band number 2, which is any value between 200,000 and 262,500. So even if I felt that my house was worth a little bit more, or even if I felt that my house was worth less, it's not going to go down as low as below 200,000. And 200 band 2 would be a safe estimate for my property. So this is your balanced and honest opinion of the value of your property on the valuation date. Now, you do need to back that up with evidence. So what I would do, I would advise people to do, is to print out those pieces of information, print out the property price register situation, and go back to the Daft search and find the property that was on, which I told you about, at 230,000. And they're your pieces of evidence. So that if, for example, you sold your property in 6 months or in a year, and it had jumped into a different band, what you're explaining is the justification for your opinion today at the valuation date now. So even if your property value does change, which it does, property values change all the time, you are valuing it at the current time, okay? Now, you keep that evidence on file so that if you're asked, for example, if you're going to sell or transfer your property, and always remember that you need to compare like with like. I was talking about comparing apples with apples and oranges with oranges. For example, the house on the left is a detached 4-bed, it's in band 3, and the house on the right is a semi-detached and it's in band 2. So always make sure that you're valuing like with like. So now you're going to submit the valuation, and revenue provided in the letter to you login details for an online return. And online is compulsory if you're already on Revenue Online or if you have multiple properties. A written submission is possible, but only if you contact Revenue and explain your difficulty. Perhaps you don't have access to the internet, perhaps you're having challenges using the internet, or perhaps there's something in particular that makes the process more difficult for you. But when you go on there, and I'm not going to go step by step through it because it's actually a very straightforward system. The system is very, very easy to follow. Revenue, if you look at the letter that Revenue given you, if you turn it over, you'll notice that they've given you an estimate value of your property, which in their opinion is what your property is worth. If you don't make the return, their estimate stands and they will deduct that money at that level. However, you are still legally obliged to file a return. So even if you ignore all these letters that you're getting to make your return, you are still legally obliged, and it will begin to affect you if you don't file the return. So for example, if you need a tax clearance certificate, perhaps you are self-employed, or perhaps in your business, I don't know, you you tender for government contracts, or if you're planning to sell your property, you're going to need to have your local property tax return done and all matters up to date. So exemptions. So this is again a screen grab that shows you that there are 9 possible exemptions. You see them there relative to the local property tax. And this is the property on the 1st of November 2021. Is this property unoccupied on that date? And please explain why your property is exempt. And you can see the options there: long-term illness, the residence of a severely incapacitated individual, pyrite damage, defective concrete blocks grant scheme, fully subject to commercial rates. That is to say, the property is not a dwelling. It's owned by a public body for special needs. It's a charitable recreational activity. It's a north-south implementation body and a registered nursing home. So these particularly 6, 7, and 8, they're very, very, very specific exemptions. If you are subject to that exemption, you're going to know about it, okay? If you're not sure, you can contact the council or you can contact a property service provider such as ourselves. But by and large, if you're unsure about this, you will have documentation to tell you if you're part of the north-south implementation body. And then the third stage, you're going to arrange payment. So you can pay by annual direct debit per property. You can pay by monthly direct debit, which is phased payments, or you can pay by phased payments by deduction at source. Whatever method of payment you've been using up to now will carry into 2022, unless you need to approach them and to change that. And there are options for full or partial deferral of payment. So just to give you a few notes on this, you can defer the payment by 100% or by 50%. And it's not an open-ended thing. You have to prove the basis upon which you're applying for the deferral, be it, for example, income threshold, a mortgage adjusted income threshold. If you're the representative of a deceased property owner, that would be a property that is currently in what's called probate. If you are subject to personal insolvency, or if you're claiming the deferral on hardship grounds. But remember that there is interest payable on a deferred payment. Up to the end of this year, it's at 4%, and from the 1st of January, it's at 3%. So you will need to prove that you are applicable for a deferral. So we'll move on to some questions that I've been asked a lot about since the local property tax situation came about. The first thing is, I'm selling, should I still pay? So what I'm going to tell you now is really important. The local property tax is a non-negotiable element of concluding any sale of property. That is to say, if you haven't paid your local property tax up until the date that the sale is closing, you can't close the sale, because the purchasing solicitor won't accept a property on behalf of their client which carries an outstanding local property tax liability. In other words, the purchaser is not going to pay your tax liability. Okay, so it's up to the vendor to prove and to provide proof of local property tax payment, which they're going to be able to do. If, for example, you've been paying online, you can print it out, or if you're unsure, you can ask the council about this. You may also need, if you, for example, if the value of your property has changed substantially since 2013, you may need to provide the evidence that you relied on to support your 2013 valuation. Remember, I said to you earlier that whatever evidence you use to help you reach your opinion of value, you should keep that in a file, print it out and keep it. Well, the same would have been said of 2013. So if you have the evidence that you used back then, you need to provide it, or you can get a formal valuation done. And the valuation date for that is the 1st of May, 2013. And using that, your solicitor will seek what's called revenue clearance. If you had an overpayment, there will be a reimbursement made through your solicitor. And if there was an underpayment without satisfactory evidence that it was appropriate, or without a formal valuation from a proper valuer, well, then you're talking about underpayment, and that may need to be brought up to date. Another question which is being asked a lot, and I always urge people with these very specific nuanced questions, such as nursing home residents, you do want to make absolutely sure about these. So for the owner of a property in long-term nursing care, if the house is vacant, then an exemption is likely. And if you have made the house available for occupancy, then you do need to check that out, because it could depend upon the status of the property on the valuation date. Okay. If you have a rental property, a residential investment property, the landlord is the person liable for the local property tax. If you are in a 20-year lease to the council, then the local authority or the approved housing body is usually the liable party for the local property tax. And that was one of the key incentives for landlords to sign up to the 20-year lease in the last few years. You might recall that. Arrears or non-payment. Okay, so if you just chose not to pay, well, that's just not going to go away. Okay, that's going to keep on coming after you. Unless you were entitled to an exemption. Did you claim the exemption that you were entitled to? If you just didn't pay for some reason or another, you really do need to get it sorted out as soon as possible, because you're really in the territory which involves penalties and interest on non-payment of tax liability. And again, what I mentioned earlier on, withholding of your tax clearance certificate. And for some people, a tax clearance certificate is the difference between being able to get on with your work and not. And also, if you're thinking about selling, you cannot conclude the sale of the property that has arrears or non-payment on the local property tax. Particularly, I mention it to landlords. If you've not been paying the local property tax, you need to get it up to date. Now, a very, very topical issue at the moment is that of pyrite and mica. Now, honestly, my heart breaks for the people who are involved in pyrite and mica, because it's a dreadful situation to be in. If your house is subject to pyrite or mica damage, you need proof as follows. You need it to provide the certificate. Any property that claims pyrite or mica has to be certified as having significant damage. And that certification is going to be key, not only for you, obviously, seeking involvement in the remediation schemes, but also for exemption from the local property tax. So you need to be also confirmed as being eligible for consideration for remedial works. Okay, so the documentation is that you have in any regard to pyrite or mica. It's absolutely crucial that you stay on top of that paperwork. But anyway, your neighbor having pyrites, even if you live in a semi-detached house and the neighbor beside you has a certificate for significant damage, that's not going to work for your property. You need to have your own paperwork in order, even if you're subject to the same circumstances. I will also point out that not all properties are the same. Now, for the local property tax, for some property owners, maybe you live, as I say, in an urban area, in an area where all properties are very similar. Not all properties are necessarily the same. And there will be a couple of you who will, even though through your best intentions, still not be able to get a specific value that you're satisfied with on your property. And there's a few things here that are worth pointing out to you. So the first is, for example, a house on a large site or large lands. That would be, for example, a farmhouse. And in a farmhouse situation, you're only including up to 1 acre of land, up to 1 acre of land. And that up to 1 acre will typically include the land immediately adjacent to the property, maybe the gardens front or back, the driveway to the property, and you don't go over 1 acre. And if you have agricultural or commercial buildings adjacent, farmyard, farm sheds, they're not included. Okay, so anything that's non-residential should not be included in the local property tax. So even if you sold, or if you're thinking about selling a property that has the benefit of an array of sheds, that those array of sheds should not be included in the local property tax. If, for example, you have a granny flat, which is a self-contained unit, you can, depending upon your circumstances, you will either include that within the local property tax return that you're making for your main property, or you may need to make a separate submission. I really, really do advise people, though, to get financial advice about that. And I'm talking specifically about asking an accountant, because you may get into a situation of having a second residence, whereas a granny flat is typically there for the benefit of a dependent relative. You need to get financial advice about that so that you're not either over or undervaluing, but also giving rise to further difficulties if you misdefine what this granny flat might be. A bedsit for local property tax purposes is exempt because a bedsit by its nature is not an independent self-contained unit, and a mobile home is also exempt from local property tax. So another few things that have come up in the last few weeks, people asking about structural, planning or legal problems. So if your property is subject to a structural, a planning problem or a legal problem, you're not exempt from the local property tax, but the problem that you have may well affect the value of your property. And I would strongly recommend that anybody in that situation should get a professional valuation carried out. We're doing the local property tax valuations for €150, unless the property is substantial. But for most properties, that'll be 90% of them, a valuation for €150 will suffice. And if, as I say, you have structural problems, planning problems, if you have non-compliance on the property, that's going to affect your saleability, which will of course affect the value of the property. If you have legal problems, perhaps relating to title, structural problems might relate to subsidence or something like this, but not obviously to be confused with pyrite or mica. And if it's a substantial problem, you may need to get an engineer's report. So say, for example, there's a boundary issue and the boundary is not as it is to the eye, it's actually, you know, cutting through the property. That might be a boundary issue and you need to get an engineer's report about that. Suffice to say, I could sit here all night talking about possible nuances and potential issues that arise within property ownership. But for those people who might have those very unusual property issues, you're best to get in touch and just try to get proper documentation in relation to that, because it could be affecting your property value. So what if you made a mistake? Say, for example, if you have overpaid or underpaid, or you didn't accurately claim an exemption, then don't panic. You just go ahead and contact your local revenue office. Now, I have never had a difficult communication with revenue. I find that whenever I need to contact them for something, they're extremely helpful. They're there to be helpful. They're not hiding from you. They're not trying to catch you out. So don't be afraid of picking up the phone and contacting your local revenue office. As I say, I've always found them to be very approachable people. And here's a really big question, which is coming up time and again. Valuing the property now where we are, which is in what's called a seller's market. That is, you know, you've heard about this broad acknowledgement and media reports that property values are up about 10%. Okay, so that could be the difference between going into band 1 and band 2. For example, if your property would have been 190,000 last year and now it's up in over 200,000, okay? A local property tax return can disregard this top value if it's a balanced view backed up by evidence. So whatever evidence you have, that's why I always say, make sure it's balanced, make sure it's credible, and make sure you keep it in case you have to stand and account for it in the future. But beware undervaluing. I mean, substantially undervaluing. And I know, you know, there was a lot of talk back in 2013 about people really undervaluing their property for the purpose of local property tax. There's new legislation in place this time around, a Finance Act, which actually gives revenue the power to investigate, that is to carry out compliance checks on our local property tax submissions. So say, for example, you live in number 2 Main Street and you put it into band 1, and number 3 Main Street sells in 2 months' time for substantially more, as in up into band 3. Well, if revenue identifies that, they do have the power to carry out a compliance check with you, whereby they contact you and say, I noticed that for your property number 2, you valued it in band number 1. And they will ask you to show the evidence that you used to rely on for this self-assessed tax. So you must retain the information, and bearing in mind the words that we're using, a balanced, valid opinion and a credible opinion of the value of your property. So folks, we've gone through a lot there. I hope it's been really useful to you. You will probably you've all probably received your letter by now. If not, check your Ross inbox, because it's probably sitting there if you haven't seen it yet. If you do have any questions, if you're unsure about anything, do give us a call. You know, we've been speaking to a lot of people who are genuinely anxious when they get this kind of letter in from revenue in the post. Don't be anxious. You still have a few weeks left, but don't please leave it until the last minute. The revenue return has to be made by the 7th of November. Okay. So don't leave it until the 4th, the 5th, the 6th of November, because that's going to be too late for us to really get time to do a proper balanced opinion of your property. And also for the landlords out there, you might have a few properties to value. So make sure that you're looking at each one and scrutinizing each one. I hope that's been of useful. Please do get in touch and give us your feedback, and please do let us know if we can be of assistance to you. You can get us on email at info@lavelles.ie. You can get us on our website, which is www.lavelles.ie, and you can get us here in Bridge Street in Dundalk in County Louth in the beautiful St. Nicholas's Quarter. And also you can find us on any of our social media channels, Facebook, Instagram, and on our YouTube channel as well. We're going to put this up here if you have any further questions, and please feel free to share this with others, because it's free information and I'd like as many people as possible to get the benefit of that. Thank you very much for joining me, and all the best. Thank you.